triangle, then support is horizontal. The next pattern in this list is on the same time granularity, 240 minutes as well, but it spans over a longer time. So if I could use the highlighter here, the first pattern starts roughly over here. So effectively, you've got a pattern inside another pattern. And in this case, both of these show an expected bullish movement. So they're actually two signals that confirm each other. The greater pattern, you can see the resistance line is not quite as horizontal as the previous one, but it's also a triangle. So these two signals are actually supporting each other and say we're both expecting this breakout to continue in a bullish direction. What has actually happened, however, let me just enlarge this quickly. Immediately after we recognized this pattern, this pattern was recognized, by the way, so let me just quickly go back to see what the time was. Yesterday, 12 o'clock. So since then, we've had 1, 2, 3, 4, 5 4-hour bars that have completed. But look, they have gone not quite in the expected direction. We had the very first bar that came close to our target region. It didn't quite get there, and then it pulled back again. And since then, it's just been going in the wrong direction. You could view this as a minor pullback, or I would start to view this as sort of not major, but maybe a medium pullback. I would think twice about getting into this trade. If I am in this trade, I wouldn't think about exiting yet, because it could still continue. It could still just be a minor pullback. But normally, I shouldn't say normally. What I want to say is, just as you have these two signals confirming each other, both pointing in the same direction, you also have cases where you've got two signals in the opposite direction. In other words, you would have a bullish signal and a bearish signal at the same time. Actually, let me just see if we have something like that. I'm just quickly trying to see. Okay. Yes, potentially an example. It's very old. It's a very old example. We have United Overseas Bank. As you can see, a lot has happened after the pattern was initially detected, because this was detected early in the month, the 1st of February. And it's not comparing these two patterns quickly. Uh, 240 minutes. Okay. Okay, so here's a. Hopefully it's this explanation will help. Or hopefully these patterns will help my explanation. Now, something to note, there are a couple of things you need to note. The two most important things to disambiguate these kind of situations is look at the interval. Okay, in this case we've got a 60-minute pattern. That means every single bar is 60 minutes. It takes 60 minutes to form. And the length of the pattern is over 37 bars. In other words, from start to finish, it was created over 37 trading hours. So 37 times 60 minutes. While the market is open, obviously. We don't take weekends and evenings into account. So So this is a relatively shorter term pattern compared to the other one. So in this case, the price shot up and it actually went way past our target region. So it was a successful pattern, but in the short term. Okay, in the short term it was successful, and okay, it happened to continue, it happened to come back and go back up and down and up and down, but the trend was kind of bullish after that. The other pattern is a much longer term pattern. This one now is 240-minute pattern, and the length is also longer. The length is not much longer, it's 43 as opposed to 37. But for each one of these 43, we're looking at 4 hours. So it's 43 times 4 hours, so it's more like 160 hours. So that is many times longer than this pattern. And that's also why you'll see this pattern doesn't seem to have quite as much subsequent price action going on as the first one, because it's almost effectively a zoomed out view. So the first pattern, I would say, probably formed right about in this area over here. Maybe even a smaller area than that. Let me do this again. That little bit that I'm highlighting, that's really the little portion where this earlier pattern was formed. Over the other thing is it formed a couple of days earlier. 1, 2, okay, so it's not much. So maybe that whole drawing should shift a little bit to the left. We'll do this again. It's probably somewhere in here then. And the outcome of this pattern was not so interesting. Well, I guess in a way it is interesting, but not what we expected. After the breakout, the price went sideways. Now obviously if there's a breakout expectation, the theory of the chart patterns is that there should be a certain amount of momentum. So the more time that passes after the breakout has occurred that you don't actually go towards this target level, it's almost like a missing person. Your likelihood of finding a missing person decreases as time goes by. So it's the same with the chart pattern. The likelihood of it turning towards this direction, if it's not already starting to go in that direction, decreases as time goes by. So by around this time over here, especially where it started going up, I would have said, hang on, this is probably not going to happen. And I would have exited the trade. Wouldn't have been a huge loss, but I wouldn't have made a gain either. So I hope this illustrates to you that you can have, sometimes they occur right after, the one after the other. One says bullish, the other one says bearish. In those cases, look at the interval and the length of the pattern and decide then. Sometimes you're looking at a very long-term pattern that spans over days, and that may have a bullish outlook, but a much shorter term pattern that spans over hours may have a bearish outlook, and both could actually be correct. Just something to show you quickly. You notice this little orange dot that appeared next to the chart patterns button here at the top, that little orange exclamation mark. That simply serves to tell us that we've detected new patterns on this particular search. So when I click on this search again, I see the 3 new patterns that have just appeared. We've just uncovered 3 new emerging patterns. And they have completed at 8 o'clock Singapore time. Okay, I've got another question. Thomas wants to know, what's the rationale behind the quality ranking? Let me quickly go through that. You see these little funny colored blocks over here, the various quality indicators. Now, the quality column, which is also the quality indicator top here, is simply a simple arithmetic average of the other quality indicators. The best way to get a sense of what each of the quality indicators mean, I'm going to explain it to you when I show you how to set up a new search. But let me put it this way, Thomas. The rationale is really to try and describe what a good-looking pattern visually looks like. And for that we use different indicators. So for example, the one indicator is called clarity. If you have a lot of volatility and a lot of wild price action on a graph, then it's more difficult to make out what the pattern actually looks like. So then you'd have less clarity. So we take a little bit away of the visual quality. Let me show you this in fact. Okay, let's put this discussion on hold. First, I want to show you how to create a new search, and then it'll be easier for me to explain it that way. In this area at the top left of your screen, you'll see a small list of searches that are listed here. What we call a search is effectively it's a group of symbols that we've chosen together with some filtering criteria. So it's a combination of a group together with a filter. And whatever search we have selected in that list, in this case the one that's selected is rather it's a faint yellow. It's the top one, the Singapore all day. So I can remove the search by clicking on the little cross next to it, or I can edit it by clicking on the little pencil next to it, or I can create my own new search by clicking on this button in the middle left here which says New Search. So when I click on that button, it opens up a new window for me. And an important distinction here is in the search type. I can either choose from an existing group of symbols, or I can put together my own group of symbols. So the existing groups are typically sorted by exchange and by time granularity. Like for example, I can look at 30-minute graphs on the Hong Kong Stock Exchange, or all intraday on the London Stock Exchange, etc. And whenever you select something from this list, let's say commodities, end of day, you'll notice that the search name is updated. When it changes again to Forex, 240 minutes, you'll see the search name updates again. So remember, whenever you create a search, you give it an appropriate name. If you want to add your own list of symbols, select the little symbol radio button and then start typing the name. So let's say SPH, for example. This stock is on the Singapore Stock Exchange, so I can just select it here and I click on the add button, and then you'll see it appearing in the list underneath. I'm just writing some names that I see on the list in the back end. So Hong, if I start typing Hong, there's some on the Hong Kong Exchange, some on the Singapore Exchange, some on New York Stock Exchange, and some on Kuala Lumpur Stock Exchange. So let's say I want to see the Singapore one. Hong Leong Asian Limited. add that one, and add. Now notice that my search name has been updated with the last symbol that I've added. So I can change my search name to some Singapore stocks, just as an example. And then when I create my search, its name will appear in my list on the left here. So I've got some Singapore stocks, SPH and Hong Leong. Not expecting too many patterns to have competed with them. And you can see they date back to quite a lot of years ago, quite a long time ago. Okay, I'm going back into my search. In fact, I'm going to edit my Singapore search. Click on the edit button. It's the same screen from when we created the search, but now I will open this little advanced search tab here and scroll down further. Now for the advanced options, like I said, these are filtering options. First we've got price range. Maybe you want to not look at penny stocks, or maybe you want to limit the maximum price for stocks that might be too expensive for you to trade. A lot of stock traders also just choose bullish stocks because on a lot of exchange short selling is not allowed, not possible. We've got some continuation patterns, some reversal patterns. What this means, a continuation pattern has an initial trend in the same direction as the breakout. Whether it's bullish or bearish, they're in the same direction. A reversal pattern is where you have an initial trend that is bearish and a breakout that is bullish, or vice versa. So the initial trend and the breakout are in opposite directions for reversal patterns. Minimum pattern length can be set. It makes perfect common sense for a trader to know that patterns that form over a longer time period are actually better patterns. They tend to be more successful, and it shows in our statistics as well. And here we're getting to the quality indicators. Now Thomas, for you'll be able to get a nice picture that explains to you what each of the quality indicators mean. So let me go through them from the top quickly. The first one is the one I've explained to you already, called clarity. So noisy patterns would have very low clarity, but patterns where the movements are clear and elegant would have a higher clarity rating. The next one is initial trend. Now in the charting theory, initial trend plays quite an important role as far as your expected breakout is concerned. The stronger your initial trend is going to be, the bigger we expect the breakout to be. So a pattern with a good initial trend gives us a very strong trending indicator, and we can really expect better success from patterns with a good initial trend. In exchange traded instruments like stocks, we also look at volume. If there was a volume increase towards the end or the latter part of the pattern, that says to us, more people are trading the stock, there's activity on the market, there's more liquidity. That is also a positive sign for any trader, so we say it's a better rating overall. Volume is the only one of these indicators that doesn't end up doing a visual thing, that we don't. It's the only one that we don't see on the price graph display. Uniformity is one that came in later years, because certain patterns, like triangles for example, they converge, but we still expect the touching points on the support and resistance to be evenly spaced. In other words, you don't want them all bunched up within a few bars at the end over here. It's got to be a nice, even, almost like a dance that the price does between the support and resistance levels. You see, it makes a prettier pattern if the turning points are spaced uniformly. And that is actually a really good rule of thumb. my uncle is a sheep farmer, and I asked him, how do you decide what is a good quality sheep? And he told me once, I don't know, it just looks pretty. And it's the same thing with patterns. As you've got experience, you'll learn to spot the patterns that just look good, and that's what we're trying to indicate with these quality indicators. The patterns that look better tend to be of a higher quality. The final one is the breakout strength, and that just gives us a quantifiable measure of how big the move was that actually crossed the boundary, in this case like a resistance line. How far did the price jump beyond the resistance line? In other words, how big was the breakout? Because that also gives us an idea of how strong the momentum is when the price crashes through the line and completes the pattern. And then finally at the bottom here you can choose. We've got 16 different types of chart patterns. Each one comes with a description. You can include some or exclude some depending on your priorities. Okay, so that's a quick overview of how you create the search as well. Just got another question. Can this tool be used to look at the trend of indices like the STI? Yes, absolutely. In fact, let's have a look at this search over here. All of these listed here are indices. I don't see anything for the STI at the moment. No patterns come through. But this is the S&P 500. This is the Dow. We've got an emerging pattern on the Hang Seng Index. In fact, these chart patterns can be applied to any instrument with a price graph. Anything that is liquid, that is traded often, where the mechanics of market psychology can be applied. In other words, if there's humans trading this thing, and lots of them, then you can apply the chart patterns to it. Chune's next question was, how do I interpret initial trend strength in non-trending patterns? Pretty much the same as you would in trending patterns. Better initial, obviously you kind of look at the aperture of the start of the pattern. If it's a triangle with a very steep, very sharp slopes, in other words, with a wide open triangle, then you'll be more hard pressed to find a high initial trend rating. So look, take all of these factors into account. But the general rule of thumb is more initial trend, a higher initial trend rating gives you a better quality pattern. Guys, I've been blabbering on for about an hour now, and I haven't really left much time for more questions. So let's start opening the floor. If you have questions, let me address them now, and then in the last few minutes I'll just quickly give you an overview of Fibonacci patterns. Okay, so at the top here, you click on Fibonacci patterns. The mechanics of the interface is exactly the same for chart patterns and Fibonacci patterns. The only difference is the patterns themselves. Now, as you may know, Fibonacci patterns, they just basically classic Fibonacci setups. The Fibonacci ratio gets applied, and we're looking for potential support or resistance levels. Like, for example, in this case, you have an ABCD pattern. The price turned at a certain point, and we have calculated Fibonacci levels that says any one of these could be potential resistance, or in another case could be support. Emerging Fibonacci patterns are a little bit more convoluted. in the sense that you will see for emerging Fibonacci patterns there is this pink dot over here, and there's a lot of things that kind of have to happen before an emerging Fib pattern can be of use to anyone. So what this dot means is that, like this pattern for example, it's a 3-drive pattern, it's a 5-point Fibonacci pattern, quite a big type of Fibonacci pattern. It says, were the price to go down to this level here, the level of pink dot, 8.681, then, sorry, if the price went down there and the price turned around at more or less that level, in other words, it made a turning point at this pricing level, then these Fibonacci levels would be potential resistance levels. So in this case, the price graph is still going down, but at a very slow rate. So I don't think this pattern is going to complete. Let's look at a simpler type of pattern, emerging ABCD. Now in this case, what happened was the price did in fact reach the level of our pink dot, 151, but it didn't turn around there. If it did turn around, it would have made these potential support levels applicable, but it didn't. So it just continued on, meaning this pattern is no longer completed. One of the new features that we brought into our updated version of the application is that we're only showing you trade opportunities that are still valid. You see, like we had in the chart patterns here as well, some of these longer term patterns at the bottom that have come and gone. Let's look at an older pattern, something like this for example. This might still be tradable, let's say, actually. Probably not. Arguable, I would say. Probably not. I'm just clicking around here at random, looking for things to explain. Let's take this one for example. Here was a very quick breakout, and then the price went in the opposite direction, came back, but not all the way. So, I mean, really, by this time, when you see a pattern like this, it's long gone. There's no trading opportunity with this anymore. So what we're doing in the new application is we're hiding that, we're expiring them, so that only thing you will see on your screen are opportunities that are still valid, that are still in the running, where we still think there is still a chance to make a little bit of money, even if it's just a little bit. At least the opportunity hasn't come and gone completely. So that's something for you to look forward to. I'm going to hopefully be using that platform in the next webinar that will be held on the 1st of March. I'll also be paying, I think, particular attention to the difference between completed and emerging patterns, and we'll possibly also have a look at key levels by that time, hopefully. So, if you have no more questions, then I would just like to say thanks very much for giving me your ears and for paying attention. It's been a pleasure to ramble on a little bit to you about the product. Just to reiterate, remember, it's a tool that is aimed at giving you a list of trading opportunities. Don't follow them blindly. Get other opinions that you add to the Autochartist opinion. I see I've got a quick question here from Carol saying, how long do you keep the completed pattern? Carol, that really depends on those two things, the interval and the length of the pattern. In other words, if I've got a pattern like this, that's 240 minutes over 131 patterns. You see, if the price was not going in the wrong direction here, this is really a nice pullback, and it looks like it's going to stay inside this range. But look at the overall length of the pattern. Our statistic, where we say the one that we use to calculate our 70% accuracy, is we look at no longer than 1 times the pattern length beyond the breakout. So in other words, if the price continues for another 131 bars afterwards. That is really as far as you can go into the future before you have to say, look, whatever that pattern was, it really doesn't apply anymore. Short-term patterns, especially like here's a 24, 60 minutes. That's a very short-term pattern. Shorter-term patterns are slightly less reliable as well. Look, this one quickly made its way down to the target region. It reached it, and you know, they come and go quickly. So its lifespan would really only be about 24 hours, literally, before you can, you know, can't believe anything about it anymore. So I hope that answered your question as well. Next time, or 1st of March, it's a couple of weeks away. Bring more questions if you're interested. Until then, I say thanks again, and best of luck with your trading. Whenever you have questions about Autochartist, you must feel free to send us your questions at support.autochartist.com, and we will try and address them and give you answers as best we can. Guys, it was a pleasure, and I look forward to talking to you again soon. All the best. Have a great evening.